Japan faces a familiar dilemma. For decades, the world's third-largest economy has grappled with sluggish growth and deflationary pressures. The COVID-19 pandemic only exacerbated these issues, revealing deep-seated structural problems. Prime Minister Fumio Kishida now faces the daunting task of reviving Japan's economic engine while navigating a global landscape fraught with uncertainty. Japan's once lauded technological prowess has been challenged by emerging Asian economies. Its aging population and shrinking workforce present a demographic hurdle. Stagnant wages and a widening wealth gap further complicate the picture. As the world grapples with inflation and geopolitical instability, Japan finds itself at a critical juncture. Kishida's government has unveiled an ambitious new economic strategy aimed at tackling these multifaceted challenges. This plan, dubbed New Capitalism, seeks to foster sustainable growth while addressing social disparities. Its success or failure will have profound implications not only for Japan, but for the global economic order. At the heart of Kishida's economic strategy lies a crucial wager: incentivize businesses to raise wages. The plan hinges on offering significant corporate tax cuts to companies that commit to substantial wage increases. This measure attempts to break the cycle of stagnant wages and low consumer spending that has plagued Japan for years. By boosting employee incomes, Kishida aims to stimulate domestic demand and drive economic growth. The logic is straightforward. When people have more money, they spend more, leading to increased production and investment. This in turn could help pull Japan out of its deflationary spiral and create a virtuous cycle of economic expansion. However, the plan is not without its critics. Some argue that it places too much emphasis on corporate incentives and might not translate into meaningful wage gains for ordinary workers. Others question whether tax cuts alone are sufficient to address the deep-rooted structural issues hindering Japan's economic potential. The success of Kishida's plan hinges on a delicate balancing act. The government needs to incentivize corporations to participate in the wage growth scheme while ensuring that the benefits trickle down to workers. If businesses pocket the tax cuts without substantially raising wages, the plan could exacerbate existing inequalities. Furthermore, the long-term efficacy of this approach remains to be seen. While boosting wages can provide a short-term economic boost, sustainable growth requires addressing deeper structural issues. Japan's shrinking workforce and rigid labor market pose significant challenges. To achieve lasting economic revitalization, Japan needs to implement comprehensive reforms beyond tax incentives. These include measures to boost productivity, encourage innovation, and attract foreign investment. Addressing the demographic challenge through policies that support families and encourage immigration is also crucial. Section 4: Global Ripples and Domestic Challenges. Japan's economic performance has significant implications for the global economy. As a major exporter and investor, a revitalized Japan could provide a much-needed boost to global growth. Conversely, if Japan's economy remains stagnant, it could drag down global trade and investment. Domestically, the success of Kishida's plan will depend on its ability to garner public support. Many Japanese citizens are skeptical of trickle-down economics, having witnessed decades of stagnant wages despite corporate tax cuts. Kishida needs to convince the public that his plan offers a tangible path to shared prosperity. This requires clear communication, transparent implementation, and a willingness to adjust the plan based on its effectiveness. Building trust and consensus will be crucial for navigating the challenges ahead. Section 5: Charting a Course. Will it be enough? Kishida's economic strategy represents a bold gamble. By incentivizing businesses to raise wages, he aims to ignite a virtuous cycle of economic growth. However, the plan's success is contingent on several factors, including corporate participation, wage increases that benefit workers, and addressing Japan's structural economic challenges. Whether these measures will be sufficient to revitalize Japan's economy remains to be seen. The global economic landscape, characterized by uncertainty and volatility, adds another layer of complexity. Kishida's government faces the daunting task of navigating these choppy waters while implementing ambitious reforms. The coming years will reveal whether his wager pays off, or if Japan needs to chart a new course towards economic revitalization.